People love a crowded trade. They love to follow the crowd. During COVID, what did they love? Amazon, Zoom, anything that benefited from us being stuck at home, right? What do they want now? Well, they want companies that are profitable, paying dividends. And because it's a crowded trade, they are willing to pay very huge prices for those companies. And they get excited when a company pays a dividend. Even when the dividend yield is tiny, they get excited. What's so excited about that? But even I see people that specialize in microcap stocks, they'll go on Twitter and they'll say, do you have any small cap, microcap stocks, but they got to be profitable? It's like you're missing the whole point. You're missing the whole point because that's not where the money is made. Okay? Think about this. You have an apartment building. If the apartment building is, fully leased out, 90%, 99% occupancy, just with a little bit of vacancy, normal vacancy, that's a stabilized commercial real estate asset. Those kinds of assets trade or are valued based on net income and divided by a cap rate. So let's say if the net income for the apartment building is $1 million and then the cap rate is 10%, the apartment building is worth $10 million. If the cap rate is 5%, the apartment building is worth $20 million, right? But it's stabilized. I call it retail ready. Not much upside. You're going to get the cash flow, but is there much upside to it? Well, no, because it's already stabilized. The money is not in buying stabilized property. The money is in developing properties, being a real estate developer, building them, getting the land, getting the construction done, leasing it out, and then selling it to, let's say, a REIT, because a developer will develop it, put all the hard work into it, lease it out, get it to a stabilized condition or retail ready, and then flip it for a stabilized price, retail price to a REIT or somebody who wants to just have it for a cash flow. So that's equivalent to like a dividend paying stock, right? So the developer made all the money, took a lot of risk, but made all the money. And then the people holding this, they have a stable asset, right? It looks good on paper. They can brag about having something that's cash flowing like that, but that's not much upside, right? The same thing with companies. If you're looking for a stabilized, profitable, cash flowing, buying back stocks, then buy yourself Google, Apple. You're going to feel good, but it's boring. There's not much upside, right? And if you look at companies like, Oracle or let's say Aduro that I'm talking about on this YouTube channel, Oracle is never going to be profitable. Never. That's not the point of the company, right? They're never going to be profitable because they're never going to put Santa Thomas into production. It would take, $1.5 billion to put it into production. That's not the business. That's not the business of developing the asset, right? Developing it, meaning developing it as an asset on paper. But just because Oracle is never going to be profitable doesn't mean you're not going to make money on it. Doesn't mean that Oracle as a company is not worth anything because they're developing an asset, and then that asset is an ingredient for somebody else to make profit and cash flow from it. But the same applies as if this was an apartment building. Whoever buys Santa Thomas will develop it as if they were building an apartment building, and then they will put it into production, and at some point it will become a cash flowing asset to them. It will become a stabilized asset. But Oracle in itself will never be profitable. Aduro, I also hear people talk about, oh, Aduro this, when Aduro reaches profitability, or it's going to get re-rated, or this or that. Like, are you an idiot? Like, really? You really don't understand it? Like, yes, Aduro has certain projections in their investor presentation. You know, we're going to generate this much in revenue, blah, blah, blah. If there's this licensing, like, wake up. Wake up. In my opinion, Aduro will never be profitable because Aduro, in my opinion, will be acquired and taken out before it becomes profitable. Why? Because, and it's not because the management told me so, it's because Aduro's technology is so incredibly valuable. It's like Santa Thomas in a way. It's an asset. It's an ingredient. It's an ingredient to build a tremendous business around it. Okay? If you start looking at, Dow Chemical, how much, for example, Dow Chemical wants to recycle of plastic per year, like 3 million tons, the CEO said. How much a company like Shell wants to recycle. If you realize how much need there is, you realize that Aduro's technology is an ingredient to build a 40, 50, $100 billion company around it, around that business. There is a need for it. The governments wants it. The world wants it. So its technology is an ingredient to build $50 billion business. So then, how much would you, as a developer, how much would you be willing to pay for that ingredient? I don't know. 2 billion, 3 billion, 4 billion, 1 billion? I don't know. If there is multiple parties that are interested in developing a $50 billion business, and here's Aduro, that's an ingredient, you might have different parties wanting it. And do you think those parties will care about whether Aduro at that moment is cash flow positive? No, it doesn't matter. So you have to think differently when you think of these small microcap stocks. If you have blinkers on and you only think like a dumb accountant, I know there's a lot of dumb accountants out there. If you only think like a dumb accountant, you're going to miss those opportunities because you don't understand that the companies in the microcap space, some of them go on and become profitable companies, but a lot of them don't. A lot of them get acquired. Some of them, they get acquired because they might generate a certain revenue and EBITDA. And then if the EBITDA is large enough, then that EBITDA becomes interesting to other companies that's interested in growing by acquiring other companies. But that also becomes an ingredient for somebody else's growth. But in this case, the ingredient was a profitable company. But then there's other cases when the company has something else, it's an ingredient to either improve their business, grow their business, or whatever. And an example like that now would be Voxter. Voxter is also a company that has something that is very valuable to others, okay? Whether it's individual businesses or the whole thing, it's an ingredient. So you have to think, you have to get out of the box of thinking that the only thing that's valuable is profitable. That's not the right way to think, especially during the time when everybody is piling into the names. It's becoming an overcrowded trade because everybody is so petrified of anything that is not profitable.